Okay, I've not done one for a while, so I thought it was about time I'd do a trading basis stock market update, and we'll just run through this correction. We'll back it up a bit, and we'll just have a look at my trend models and yeah, just where we are and what we're looking at. So, transports leader, Dow theory leader. Uh, some would argue that could change with the AI, the AI sort of world. But I'm a Dow theorist at heart, so you know, transports leading. Big move on the transports. We talked about it. It didn't correct. It actually forewarned this pullback. This big distribution day. Does it change anything? Well, it kind of does on short-term trading, but it doesn't if you're a trend follower on the primary trends. It's one market does not make a trend, but we take notice. Anyway, what are we looking at now? Transports, normal pullback to mean trend. We had a swing day on this day here, this green day here, on accumulation and on volume. It dipped back in, something I call a swing kicker. What's a swing kicker? Well, you get a low and then you get a punch higher, you get a little bit of a drift, and then a kick out of that sort of, not the best example, I will say, but you get a kick higher, pull back, swing kicker, bang. So, yeah, transports, it didn't make a new low after the 13th of the 3rd. I'll then just go to the DAX, which is a really, really awful trading index. And we got these huge, on the 23rd, we got these huge bars on the UK and the European markets. We got these big bars in place. Swing points traded, low volume though I may add, but they held. Now, though the markets were drifting higher or holding those lows, the markets we wait, we're interested in seeing where the real broad leadership of the US market wants to come into, and we drew some big levels here. We've got the voodoo average here, and we've got previous resistance become support, and this didn't come till the 30th. We opened up, we dipped through the lows, we closed on the lows, and then we gapped up the next day, and we got the first accumulation day there. So that was a little bit later, as you can see. The lows were put in on the 30th. And the NASDAQ, it seemed everything was waiting. We really expected the markets to actually come in a bit further, really. Well, we say it's an area, but I was thinking, well, this could easily test this down here, in even numbers. Could even, it's just an area. It could easily just get a bit more. We didn't get any volatility, is what I'm trying to say. We didn't get a volatile puke. Go back to beginning of April last year. We've just got a correction. It felt pretty painful, but it was just a correction, So that's what we've got. I've been working on my sort of trend models, just going through this period and just tweaking them, and I've got all this information I'm going to share next. It's information what I use, but I've just tried to get it all on one dashboard in a tidier way rather than sharing it multiple ways. So First things first, I'll just bring up the index dash, and this index dash is from the 27th of the 3rd. Basically, you know, the close on this day before the US put the lows in. The lows were already in Europe. So I've been running the crickets to popcorn scale, fear and greed, on my GTRS dashboard for some time now. But this basically does the same thing. Here's the fear and greed actually, index pullback zones, and this just shows you the extreme levels we were in, and we're in correction across the board here. And we got a cricket alarm. I used to call it a zone. Well, it's still called a zone alarm. I've just moved it around on the dash a bit for people who haven't seen it in a while. But yeah, I mean, correction across the board, zone alarm. It just means, if you were trading for a correction, the bears have to feed, don't they? And if you were going for a correction, well, you might want to just stop being so bearish and just be on the fence a bit more and ready to take your profit if you're on the short side. If you're on the long side, you're going to be turning up to the screens and you're going to be turning over the stones looking for interesting ideas. And they are thin on the ground. They always are if you've got some criteria you trade towards. But you're going to get some simple William O'Neill rule, just put something on. Find your best idea, put it on. If your best idea is not working, well, guess what? Watch a basket of your best ideas as well. That's good practice. I'm just going to show you the index trend models. What I've been running since, I can't remember. I think 2012. I started running the dual index trends, and I can just sort of show you how this works. I'll just go back in time a little bit further as well. This was the pandemic. On the crickets to popcorn scale, and it just this isn't about timing the market, though obviously it kind of it looks like magic on corrections, doesn't it, or bear markets or even market crashes. It's just when you screen the markets every day, there is nothing to see in your trend screens, and when the market is in a pandemic, let's say, it will go to near zero. You might be seeing 2 or 3 stocks some days. So we've just had a few weeks where we were down in the sub 10s. I got a neat reading of 8, 13, 7, 16 at the end of last month when the low was put in. So, I know from doing this every day for, well over a decade doing the same thing, that that's ticking on empty, and I've just built the dashboards to let everyone else see what ticking on empty looks like, and a little bit more. It helps the psychology. The market's going to go here every time it has a bad correction. It's going to go down into these low areas. Now I've added the max fear, max greed on here as well, which is the crickets to popcorn scale. But I mean, this was the pullback in April 25 as well. Real obvious areas where you should be turning up and looking for the next leadership of the potential next bull leg. Now, I'll just go back to basics. What if we go into a bear leg? What if we this is just the correction and we're going to go lower and visit. I'll just show you. History doesn't. As they say, history doesn't repeat; it rhymes. You can see where I've drawn those lines in the sand there. I've drawn a white line as an obvious area to get to, and a purple line. And I'll just go back a bit further for you now, because we absolutely nailed it. I actually dropped this in. Pat myself on the back. The trouble is, I dropped these levels in ShareScope on a ShareScope article, before the market got here, saying this is where our area is for the market to visit in this bear market. But the trouble is, nobody's turning up to the screens. All the investors are punch drunk, aren't they? And the investors come back. It's they basically turn up to market in good times, and that's usually mid to late bull market, and they leave the market in bad times, which is mid to late bear market, and zigging when they should be zagging, zagging when they should be zigging. So this is kind of a lesson in psychology of the markets, how markets basically work, and how it affects the human psychology, the human mind. So yeah, looking for big levels, obvious area. What's the bear case? Well, this big gap in the S&P, we just roll over and we go lower and we test that, and then it's happy days. We've had a really good reset. Doesn't mean it will happen. What's the bull case? Well, I wouldn't say the bull case is just take the highs out and off we go. I would say the bull case is, we build a base. We back and fill it through this gap at some point, and probably do it in the most stressful way. We look as though we've put a right side in, and then we come down. And do you know what I mean? Markets tend to want to. It is human psychology how the markets trade. So the bull case for me would be we just build a base here after this huge run. We build a base. What's that? 40% off the lows on the S&P 500. We build a huge base. We coil up, and then we're looking for those really nice setup stocks. What can outperform the market? We're not looking to make money just because the market's lifting all personally, all stocks together. I'd just be dollar cost averaging the S&P 500 if I was doing that. It's kind of pension stuff, what my pension does. But I'm looking for stocks what can outperform the market, even if the market's just going sideways. It's an important point, that. So, that's the market update. That's kind of where we are. The bull case is, anything more than we're going to build a bigger base here is just like, happy days, isn't it? But yeah, the S&P doesn't like to leave gaps, and I always say clean air gaps, so a gap what's not been traded in a long time is you won't find many of those on the S&P. You will find gaps like this where it traded on the way down, but say we got a pro gap, it's that gap not getting filled. You don't see it very often. You really don't. The pandemic filled some gaps like that. I know this is way off piece, but the pandemic filled some gaps. What you thought these gaps are not getting filled, and it went back and filled them. It was amazing. Hang on, but it can be a long time before it does it. I thought I had them marked on the chart, but maybe not. Can't. Way off piece. Anyway, that's my 2 pence on the markets. Turning up every day, turning over stones as I always do, and stocks what are acting well. I'm going to do another video to follow this one. I'll probably just run through some US stocks and show you the 3 best setups I look at going forward. Okay.